Hello, good morning, good afternoon and good evening, and welcome to the webinar that we're running today looking at capital markets infrastructure in the world of digital assets. My name is Matthew Lempriere. I run the sales team for BSO in the UK, Middle East and Asia Pacific. I'm joined today by Henri from PwC and Sergiu from Bequant. Gentlemen, could I ask you to introduce yourselves?
Yeah, sure. Thanks, Matthew, for hosting us. Thanks for BSO for putting this together. Yeah, I'm Sergiu. I'm the CEO of Bequant. I've been working with the company for more than a year now. And just like, we'll go into this deeper probably later on, but, just for everybody who doesn't know, Bequant is an all-stop shop for the institutional crypto traders. And we've been active about for 2 years. We also operate an exchange.
Thank you. And Henri?
Excellent. Well, thank you, BSO, for having us. And thank you for everybody listening at home today and letting us share our passion of finance with all of you. My name is Henri Arslanian. Really, my focus is the future of money, the future of finance. And I do this wearing many hats. So one of them is at PwC, where I'm a partner and I run our global crypto team. Many may not know PwC except in Hong Kong. We accept Bitcoin. It's been 2 years, and we completed over 400 crypto engagements over the last 36 months in over 20 countries. So very active from that perspective, but also very focused on it on a more direct perspective. I'm a professor at University in Hong Kong, where I teach the topic. I write books about it, and I have probably most of you know me from my weekly show on LinkedIn called The Crypto Capsule. So very happy to be with you all. Look forward to sharing with everybody today.
Thank you, and welcome to you both, and welcome to everyone watching the webinar. We have well over 100 people registered, so I hope this will be useful to those of you that are watching. And please do feel free to ask some questions in the chat. They'll be coming up on my screen, so I'll try and answer those as I can. If we don't manage to get to your question, please do send it in after the event, hello@bso.co, and we'll be happy to come back to you with any answers to the questions. Very interesting time in the world of crypto at the moment. I saw Bitcoin nearly get to 20,000 yesterday. I was rooting for it, but it didn't quite get there. But there's also a lot going on with tokenization of securities, and some of the exchanges are doing some new products around those. So Henri, could I start with you and just to give us an update on the world of crypto, please?
Absolutely. Well, there's a lot of things going on in the world of crypto right now. As many of you have seen in the news, obviously what's making the headlines is, like I said, Bitcoin is its an all-time high. But really if you look, it's beyond these headlines, a lot of stuff is happening. A couple of big trends. One of them is really the institutionalization of the industry. 2017, the big rally was a lot of retail players, was a lot of FOMO. This time you're really seeing a lot of institutional players come in, not only with some of the big hedge funds that you've seen in the news the last couple of months, from Paul Tudor Jones to Guggenheim recently, to others around the world who have actually explicitly mentioned how they're getting into the space, and also, frankly, a lot of the sell side providers as well have been very actively now covering the topic as well. And also, but you're seeing this in a lot of instruments as well. A good example is the CME in Chicago right now. There's record levels of open interest on the Bitcoin futures. So a lot of institutional focus on it coming up. Another big trend that we're seeing obviously right now is what's happening with central bank digital currencies. So obviously Bitcoin is decentralized. Nobody can stop it. It's there. Then you have central bank digital currencies, which is digital currencies issued by the central bank. So today there's two forms of central bank money. There's good old cash that you have that you can hold in your hand, that you can touch, and it's a liability of the central bank. And the second form of central bank money is really the reserves that your bank holds at the central bank. The money that you hold in your lovely bank, whichever it may be, is actually not central bank money. It's actually pluses and minuses and debits and credits on the books of that bank. And actually, probably our generation, everybody listening to this presentation today, we will be one of the very rare generations in the history of money that will see a third form of central bank money central bank digital currency. That's very exciting. Some of the developments that are happening right now around the world, not only the UK, but frankly, most importantly, in China. China is years ahead of any country. I'm sure we'll talk about it today, what's happening. So there are a lot of big developments on that front with the institutionalization of the industry, what's happening with CBDC, and there's many, many other developments, regulatory clarity, increasing tax clarity, and actually entry of traditional hedge funds increasingly in this space as well, and so on and so forth. So a lot of exciting developments from this space, in this space right now, Matthew.
Thank you. And Sergio, what are you seeing from Bequant?
So from our perspective, I mean, it's exactly what Henri's saying. We're just noticing a lot of more institutional activity actually across the board. The rally is really, volatility in the market is good. It's good for prime brokerage institutions that are sort of offering trading venues and liquidity to our clients. And from our perspective, I mean, it's been a great 2-3 months, and we've been, we're just starting, so we're onboarding around maybe 5 to 10 clients a month on our platform. So hopefully we'll see a lot more of that. Good for us as well. So generally speaking, it's very positive. I mean, another piece of the news is, PayPal CEO Tim, I think yesterday announced that he believes that crypto is going to be, the next thing in finance, and probably one of the, the leading currency even in the day-to-day use, which is actually quite a big thing coming in from somebody who is in the traditional retail space. So retail and institutions go hand in hand, and hopefully we're going to see both really ramp up in this space.
Thank you. And I know the title of this call was around infrastructure in capital markets. And Henri, if I can come back to you, what do you think are the main drivers for the institutions to get involved? And I can comment a bit on the infrastructure later, but what do you think are the real drivers?
No, absolutely, Matthew. Obviously, there's been a couple of big developments in the last really 12 to 18 months that have really changed the game. First of all, is regulatory clarity. I mean, just to put things in perspective, today there's only 5% of regulators who do not have somebody working on crypto. Only 5. This is according to Cambridge University. I can tell you, I mean, I sit a number of advisory boards of regulators. I work with a number of regulators around the world. I would even argue that the average regulator is more knowledgeable on crypto than the average financial services professional. So I think the regulatory clarity, which was the excuse was often given, now there's clarity, which is great. And increasingly now we're seeing clarity on other topics like tax that I mentioned, crypto tax that come up. Second is really, I would say, the availability of traditional products that are available for a traditional hedge fund to get exposure to. I mean, very simple example at the most basic level is funds. Today, you have a multitude number of crypto funds that are in the market offered by licensed fund managers that are now available that were not available 2-3 years ago. In the same way that we had the hedge fund, the VC, and the P industry 20-30 years ago, institutional capital came in, people got to know the asset class, and over the next 20-30 years, they brought that expertise in-house. We see with many of the pension fund, many of big allocators today, the same thing will happen in crypto, and now you have a lot of these funds that people can actually allocate capital and quite comfortable. Third, is actually the infrastructure. I mean, you mentioned, Sergiu was mentioning prime brokerage. I mean, I spent many years of my life in prime brokerage. I was amazed when I've been in the space now since 2013 that there was no prime brokerage, and obviously now we have a lot of offerings that are not only prime brokerage, frankly, but also regulated exchanges, counterparties that people can trade with. A lot of exchanges are getting big for audits. SOC reports, SOC 1, SOC 2, which all of the traditional counterparties that any buy-side firm faces will have. Now we're seeing the crypto funds have them as well. And fourth, probably very important as well, the traditional instruments. I mentioned before the CME, listed derivatives. Now you're seeing increasingly even listed products. One of the big ones is actually Grayscale in the US. I mean, even trades at a premium. There's over $10 billion in AUM in that kind of instrument. So there's all these tools that didn't exist before. And the last one, obviously, is, let's not forget, even the retail entrants in the market are dealing with institutionalized players. I mean, Sergio mentioned before, like PayPal is a good example. PayPal took off its waiting list for US customers literally 2-3 weeks ago. Just to put things in perspective, now over the next couple of months, and now every US customer of PayPal, is about 280 million of them, can buy Bitcoin easily, off the app. So according to some public records right now, about 20% of clients have done so already. And just to put things in perspective, PayPal alone is reportedly buying over around 70% of new Bitcoin that is being mined, just to hedge the positions that their own clients are putting in. The Cash App, which is the one from Square, is buying the other 40%. So you already see there's always more buying than what's actually the new supply of Bitcoin coming in the market. So for all these reasons, I think it also, let's not even, I'm sure we'll talk about it today, Libra, that just got renamed yesterday. So it's coming up as well. So a lot of these on-ramps are changing as well. So a lot of big macro changes happening. And there's not even talking about the QE and the drivers of why people want to buy Bitcoin. This is just at the infrastructure level already. And Matthew, I think you're on mute. So
yeah. Sorry, Sergio. A similar question to you. What do you see as the real driver for the institutions getting involved?
Oh, regulation is probably number one, and then infrastructure would be number two. So definitely, I would echo what Henri said. I think Bequant itself, we started about 2 years ago, and one of the gaps that we saw in the market was there wasn't really a regulated exchange out there that could sort of service the big guys that do require that level of security, that do want to have a regulated venue to trade on. And we basically created that with the exchange. And once we were onboarding clients and getting them to trade on our exchange, we also observed that they require more liquidity and they want access to other platforms. And there wasn't any easy way to actually do and do that, right? Because for each platform that you want to onboard, if you want to liquidity from Binance, from other platforms, you need to go on onboarding, you need to write to their own APIs, you need different capital allocation across the different exchanges, you need different loans, you're going to get different rates. There's a lot of issues basically with that. Plus some of the exchanges offer, we're probably going to get into it later about colocation and fixed connectivity, which is very crucial for some of the big institutional players. Some don't, so it's kind of a nightmare. And I think what we realized is that there's really a gap in the market, and we are, I think, one of the first ones to actually start building a product and one of the first ones to release. I know there's Tagomion from Coinbase that are kind of coming out into the market as well. But I think the race is on, and I think we're pretty well positioned in this space on our end to do it. And we've noticed a lot of positive feedback from the client. Direct market access is a huge one for big institutional players. And if a prime broker does, offer that, it's not just simply offering like an API aggregator. It's actually allowing them to trade directly on those exchanges, have, be on the proper tier, and really take advantage of arbitrage opportunities. And that's been pretty much sort of I think this is going to be the driver that will get actually the big players to come in and trade, because now it's just we're going to make it much, much easier for them. Plus, on the regulatory side, I think that's really important. Bequant is also trying to get a license from the Maltese MFSA, Maltese Financial Authority, which is going to be a pan-European license, and hopefully we should be getting something in writing by the end of this month. I think crypto.com was one of the first ones to get an agreement in principle from them. So we were on the way to kind of be there as well. And I think for some of our clients, especially the more traditional players, getting, with a PB broker, prime brokerage that is regulated is of utmost importance, because otherwise they just don't want to allocate funds to somewhere. Counterparty risk is huge. So that's a big driver as well. Lending book then is a huge driver, and being able to manage risk, right? If you have a prime broker, you can manage risk across different clients.
And you brought up some interesting topics there, particularly around regulation and prime brokerage. I think the other thing is the exchanges as well. And, how do you know that you're dealing with a proper exchange? How do you know that the exchange is, a trustworthy organization, that their custody is safe and secure and things like that? And as well as working for BSO, which is my day job, I also co-chair the FIX Emerging Technology and Innovation Group in Asia Pacific, and we've been looking as FIX at the adoption of FIX APIs by exchanges to make life easier for the institutional traders, and also how can FIX as an organization offer a kind of a gold standard for the crypto industry. So as well as having the regulators, you can actually self-certify to a set of FIX rules and regulations, so that you can then demonstrate both as an institution, as an exchange, that you are, a genuine player in the market, and you're not, two kids in a bedroom in China. Going back to Henri's point earlier of where that market's going. I think that's a very important part of this as well. And if I can just give 2 seconds on infrastructure needs, BSO is a capital markets infrastructure provider. I'm sure most of the audience know that. We are seeing a lot of interest from our existing clients and new clients looking to get more structured infrastructure around the crypto world. They want the security, they want the safety of private dedicated networks rather than just using the internet. So we're seeing a step change there from both existing players that want to move into crypto and also some of the new players coming into the market. So there's definitely a lot of changes going on at the moment. So that's really good to hear. Actually, Henri, you mentioned China. For those on the call that know me, I've just relocated to Hong Kong from Hong Kong to London. So Henri's over in Hong Kong in the middle of the night. I'm over in London in the middle of a possible snowstorm. But so Henri, what is happening in China, and what impact is that going to have on the digital asset world?
Sure. Maybe for the benefit of your listeners, normally I would say in the crypto space, Asia is definitely the region where action is happening. If you look at some of the big trends that I see in Asia, I will see them in the crypto space maybe 6 months later in let's say Switzerland and the UK, and a couple of months later in the US. So I really, when it comes to trading activity, action, a lot of developments happen actually from here. When it comes to China, obviously Bitcoin trading is not allowed in mainland China for obvious reasons. When you have capital controls, does not make sense to allow Bitcoin trading, or else defies the purpose of having capital controls in the first place. But really what you see is really when China is really the world leader right now is in central bank digital currencies. So topic we were touching before. Just to put things in perspective, the FCA in the UK released its latest consultation, I believe it was in March of this year. Just to put it as a comparison, the PBOC, China's central bank, has been researching this topic and set up a research center in 2014. So it's been 7 years. They already have very active, not only research, they're actually in the very active pilots right now in China. And this is a China standard pilot. What I mean by that, the last phase that they had, over 300 million US dollar transactions were made across 4 million transactions and over 12,000 use cases. And this was not actually in 4 of the big cities in China. It was spreading right now. And really, China will probably be the first G20 country that will have a genuine central bank digital currency that will be put in the market. There's a couple of reasons for this. There's a lot of benefits to central bank digital currencies. If you're a traditional central banker and you love Bitcoin, you're crazy. It's a bit like a taxi driver, a cab driver in London being excited to see Uber come in the market. We know how that turned out in London. And actually, from that perspective, central bankers are always reluctant or reticent towards Bitcoin and decentralized currency. But there's a lot of inherent properties of digital assets that can be very beneficial. For example, if you're trying to actually monitor the impact of a certain economic policy on part of your economy, today everything happening in cash, you could not measure it. With a CBDC, you could see live the economic activity of a country. Second is actually financial inclusion as well. Today, as we're moving to a cashless society, when it comes to payment, ironically, we're actually hoarding record levels of cash. What you're seeing actually if you're able to give every citizen a digital wallet, literally then you can really reduce the number of unbanks and make them banked very easily from that perspective, in the same way that it's easy to hold cash. And third, probably a very important element, not only for the Chinese, but from around the world, is combating corruption. Again, today, if you want to do something illegal, the best way is doing it using cash, or frankly, even the traditional financial system, as we all know, according to the World Bank, although laundered funds are between 5 to 7% of global GDP, we're able to capture less than 1% of laundered transactions. So all the lovely KYC AML process that all the listeners go through with all your counterparties doesn't work. And actually, probably I would argue CBDCs, for the first time in a very long time, will give us a fighting chance. It doesn't mean we'll be able to combat it properly, but at least will give us a fighting chance against corruption, laundering, layering, all these issues that you see And obviously from a policy-making perspective, that has a lot of benefits, not only for China, by the way, for many other countries. Today, 80% of central banks are looking at central bank digital currencies. China may be ahead, but there's a number of countries in Europe, the UK, Sweden, that are also quite active in it, and especially some of the smaller countries in other parts of the world. Cambodia, very good example, and probably the most active right now that's live is the Bahamas. Who would have thought, you know? But so there's a lot of small countries, there's a lot of activity going on right now, and that makes it super exciting.
Thank you. And Sergio, what activities or what regions are you seeing most of your activities from, and how do they compare?
I think mostly, I mean, when you're talking about institutions or funds, right, they're going to come probably from the western part of the world. So mostly what we're seeing is Europe. The biggest funds are sort of scheduled either in Central Europe or in the UK, and then we're seeing some funds that are also based in the US but operate offshore. And I think those are more or less the majority of the demand is coming from there. We do also operate a white label, and we're actually seeing in there, of our exchange, and we do see a lot of demand in there from the African countries and Latin American countries.
It's interesting, and you haven't really mentioned Asia there. That's not something that you're seeing at the moment?
Not on our own platform. I think Asia is a huge market, but Asia has its own players, entrenched players in there. They have different rules. They have different rules around KYC as well. So we made kind of a conscious decision not to actively target that region. So, but we do have, I think South Korea is a player, and then we have some Japanese clients. But outside of that, I think the most of the activity is in the Western Hemisphere.
Okay.
It depends, I think, Matthew, from the type of client you're looking at. So for Sergiu, in Sergiu's case, when you're looking at hedge funds, as you know, PwC will release every year a crypto hedge fund report. Still the majority of the crypto hedge funds, which are the ones that need prime brokerage services, are still based in the traditional financial centers, which is mainly actually majority of New York, and followed by London, actually. So you still have a lot of actually proportion from that perspective. And on the retail side, Sergio is spot on. I mean, this is actually one of the biggest problems that we will be able to solve very likely over the next couple of years, is really when it comes to retail cross-border payments. Africa is a great use case. Even besides Africa, today the average fee of cross-border payments, globally average, blended, including developed markets, is 7%. And in many emerging countries like Africa, it's double-digit to send money across neighboring countries in Africa. And that's why actually a lot of we're seeing increased usage of stable coins, which are digital currencies backed by fiat currencies, and also broader adoption of some of the products that Sergio was mentioning. So very interesting from that perspective.
Fantastic.
I think one big region as well is actually Chicago in the US, because it's close to the CME area, and there's a lot of good traditional funds that are coming out of there. So it's like in between New York and Chicago.
Yeah, absolutely. I was going to say Chicago as well as a great area where a lot of the big HFTs are located. And Henri, you mentioned earlier around Libra. I'll come back to the institutions again in a minute, but I was interested in news on what your take is on what's happening with Libra at the moment.
Well, Libra, since the last 24 hours now, they're called DM. So it's great in this world. You know, I did 5 years of Latin and Jesuit school in Montreal when I was a kid. Now it's all coming back, and I can put it to good use. But they changed their name 24 hours ago with some announcements. The announcement contained a couple of things. Was a new executive team. Second, the change of name from Libra to DM. But also third, that they want to launch shortly, which is very interesting as well. There's been many rumors in the press that they will be launching as early as next year. I think it's very interesting. Libra, what's called DM, has a lot of interesting developments. You know, one thing that is to note is that there's a lot of confusion between the wallet, which used to be called Calibra, now it's called Novi, and obviously Libra, which is now called DM. But really, let's call it Libra, I think, for the sake of conversation, is an open blockchain. Anybody can build on it. Any of your listeners, any of the firms that are involved today on the call can actually come and build on the Libra blockchain, which is actually, I think, quite interesting. And really what they're trying to tackle is, I think, a very good cause, which is really in 2020, I can send a WhatsApp, I can send email for free around the world instantaneously why can't I not do the same thing with money? I just gave you guys the example of the 7%. Literally before this call, I was trying to make actually an FX wire, and my lovely bank told me we cannot because it's after hours. And forget, I tried to do a payment last Sunday. Of course, my lovely bank does not do cross-border payments on a Sunday. So I think this is some of the problems that Libra is going to try to tackle. And let's see how it goes. But I think there's a lot of excitement. The one thing I would say with Libra is that I generally believe that without the Libra announcement in June 2019, we would never have seen that acted as a catalyst. We would have never seen the action we're seeing right now from central bank digital currencies, and to a certain extent, a lot of financial institutions. This really catalyzed developments. Obviously, I think COVID-19 helped in many regards, and quantitative easing ironically helped the Bitcoin, but this really acted as a catalyst to the entire industry.
Thank you. No, I completely agree with that. There's also been a lot of news recently of exchanges that are tokenizing underlying assets. Do you have a view on what impact that'll have?
Sure. I mean, the exchange landscape is very, very interesting. I think the way exchanges operate now compared to 2-3 years ago has changed a lot. I mean, look at Sergiu was mentioning before KYC. It's a very good example. You still had until recently some exchanges that were operating with very little KYC, or KYC was more of a, not even a real process, frankly. Now a lot of things are changing. We're seeing a lot of these exchanges put in place institutional grade, like I mentioned things before, SOC 1, SOC 2, institutional grade infrastructure. I mean, good example is actually, let's come back to KYC. I would argue many of the leading crypto exchanges right now, crypto providers, have better KYC than many of the traditional banks. Very simple reason, they're able to use the latest reg tech, law tech technology. There's no legacy systems, and that makes it way easier from that perspective. When it comes to tokenization, it's very interesting. There have been some exchanges right now trying to tokenize. First of all, what is tokenization? For those of you interested, I have explainer educational videos on my YouTube page. But really, what it is actually taking an asset that is large, to which there's an illiquidity discount, and you tokenize into many different pieces. Let's take a big building in downtown in Mayfair in London. Unless you're a big fund, you're a big sovereign wealth fund, a big PE fund, you cannot go buy that big, I don't know if there's any towers in Mayfair, a big building in Mayfair. The benefit, imagine if you can tokenize that building into 100,000 pieces, and then you can buy a little chunk on it. Not only creates more liquidity, but also, if I put my lawyer hat on for a second, it really allows you to completely streamline corporate actions. You know instantaneously who your shareholders are, no more ex-dividend days and suspending of the stock. And most importantly, also you can process your corporate actions. I mean, frankly, we could even move from an annual or quarterly dividend to a daily or even hourly or even live dividend if you wanted to, just because technology enables that. There's still some challenges, to be fair. There's still a lot of different let's say standards in the market. There's one that everybody is using. It's a bit like for some of the older guys on the call today, when we had VHS and beta back in the day, or Blu-ray and DVD, and we're not sure which one is going to win. So there's now in crypto, there's a number of those. So it's really to see which standard is going to win. And also the problem of both asset owners and investors. A lot of the large asset illiquid owners are a bit more traditional, old school. You can imagine a family who's been in real estate for 3 generations, and the kid tells them we're going to tokenize the building. Doesn't go very well. It's not easy to understand. And the same problem with the investor base as well. People need to understand how tokenization works. So we still have some way to go, but we're seeing some very interesting development right now with the real estate, with piece of art. Again, if I want to have exposure to Van Gogh paintings, I may not be able to go afford a whole painting, but but maybe I can buy a little chunk of it. And we've seen many of them happen from over the last couple of years. So there's a lot of interesting developments going on from broader tokenization from that perspective.
Thank you. And Sergiu, is that having any impact on Bequant?
No, not at the moment, because there aren't any big trading venues that deal with tokenized instruments. So probably, down the line when actually that happens, we might add it to our offering. But I think it's just getting started. It's a big area. I mean, I used to work at Bloomberg before and deal with a lot of corporate actions and in the world of data. And it's a lot of data and a lot of intermediaries and calculation agent custodians, everything else. And I think basically the crypto solves a real problem here. So I think it's just a matter of time before it actually takes off and is a common thing in both the bonds market and in the actual physical goods market. So definitely something to look out for. For now, I think in London, there's only one exchange that got an FCA license recently. I think it's Archax. They are supposed to do tokenization on a bigger scale here, and it's supposed to be supervised by the FCA. But I think they haven't actually rolled out and opened up to clients yet. So we'll yet to see how that's going to play out.
Okay, fantastic. So look, I've had a question come in over the chat, which I thought I might ask. Sergiu, if I can ask you first, for trading firms that are going to set up a crypto desk, what are the things to consider before doing so?
It's a good question. I guess it depends on the level of expertise, right, of whoever wants to set something up. Obviously, you need to understand what are you going to do? What is your strategy? How are you going to trade? What are you going to trade? What markets? So depending on your strategy, depending on what type of exposure you want to do, you want to get, you would then probably look at different exchanges that you want to be active on. Then obviously you need capital. So you want to know, do you want to borrow something or you have your own funds? Then you're going to need somebody to, to make the capital introduction for you. You're going to need to set up custody services for your fund. You're going to need, at the end of the day, also going to need to set up fund administration services so that, you do proper reporting to your shareholders, depending what type of fund it is. And then you're also going to need to have a few programmers that actually understand what API means, what fix means, decide on whether you're going to do, if speed is of importance to you. In that case, you're going to need some collocation services. So there's basically a multitude of factors that you need to kind of analyze based and really just starting off from like, what are you planning to do? What is going to be your strategy? Which markets do you want to get exposure? And it's not a very complicated process if you're a veteran, but it might be a bit overwhelming if you're just starting up a new fund. And yeah, I mean, it's not like a plug or anything, but because we are in that market, we do provide sort of everything from beginning to end. So if you were to come to us, we basically set you up with both enable accounts, exposure to the different exchanges. We give you liquidity, we can give you loans, we can do capital introduction for you. Like we have separately managed accounts if you want to manage on behalf of other people that kind of gave you money.
Fantastic. There's a couple of things that you mentioned that I'm going to come back to, but Henri, what would your advice be?
Yeah, I've been getting that question a lot, actually. We mentioned before, I spent many years in prime brokerage. Actually, my other book is How to Set Up a Hedge Fund. So we used to get a lot of these questions on how to come and set up a desk on a crypto side. And frankly, there's a lot of actually benefits on it, right? Obviously, there's great volatility in many cases, which is great if you're trading. Obviously, it's also a differentiator if you're looking at compared to some of the peers as well. But the three things I would say that I've seen, having worked with a number of firms now setting up desk. First, obviously, sounds very stupid, is education. It's very, very important to make sure that everybody who's in the decision-making process understands, and maybe the decision at the end is not to move forward, not set up the desk, but understand how Bitcoin works, how the actual process works, and also some of the practicalities of digital assets. I'll give you one very simple example that we had some issues recently with some clients is counterparty risk. Only a couple of weeks ago in China, actually, one of the large derivative exchanges in the world, the CEO was actually under investigation in China, and redemptions were blocked for almost a month. So imagine if you are a fund and you're trading, one of your prime broker does not give you back your money for a month. It'll be problematic. But this happens in the crypto space because a lot of these exchanges, especially if you're you're a quant fund, these exchanges are not regulated. And what Sergio was mentioning, your custody, actually, when you're a quant fund, you keep your assets with these different exchanges. So when it comes to counterparty risk management, a bit like the big debate that we had in 2008 during the Lehman days, becomes fundamentally important in looking at your different counterparties and how you're managing the risk with each one of them. And third, I would say is really technology, because there are a lot of particularities to crypto. Very simple example, we're talking about custody, but it's a key management, private key, public key management, how it works, the cold storage, the warm storage, and the hot. So really make sure that you're able to manage some of these elements. The good thing now is increasing number of service providers that can help you, including prime brokers like Bequant. But really, they're able to actually direct you in the way to go. One thing that may surprise for a lot of people on the buy side, probably the most knowledgeable people you'll find in your team are probably the youngest guy. And then I've seen it with a number of clients. You had the analysts you thought you were taking for a summer, who just came out of university, You know, and often these are the guys that are the most knowledgeable on this perspective. I would say not only for a trading firm, more generally as well. I mean, for everybody on the line, if you want to know, if you want to find out who knows more about Bitcoin, probably call the youngest nephew you have, and you'll be surprised of the answer. I'm actually starting my class. I teach a crypto class at the FinTech and Crypto here at the University of Hong Kong. I'm teaching again tomorrow, by the way. Class is starting again. And then you'll be surprised how knowledgeable the students are. There's a really generational issue when it comes to digital assets. I think that makes it very, very exciting.
I think if also just to add one last point, I think collateral management would be also important to know when you're doing crypto, because of the the underlying technology and blockchain and how transfers work. And for each currency, the speeds are different depending on how many number of transfers you want to make. So your strategy is going to be dependent on what type of blockchain you're accessing, what type of collateral you have access to, and how you manage basically the exposure in different exchanges. And that's really key. And that kind of works slightly different than in traditional space. And if you do want to do, you want to get funded by fiat or have to do anything with that, your choices suddenly actually are much more limited, and you do kind of limited to a couple of exchanges that are regulated or on their way to regulation, and to a couple of firms that can actually provide to you, or banks that can provide to you those services. So that's really important as well.
Fantastic. Sergio, we forgot to mention also that crypto markets never sleep, huh? So think twice as well if you're happy from a lifestyle perspective. Many of my old buy-side friends, when they made the move to crypto, generally crypto markets don't sleep. And when I say about that, Saturday, Sunday is like a Monday, Tuesday. There's no after hours. You cannot go to the pub, have a pint. If you like to enjoy your weekends with your kids, you like to go watch the football on Saturday, you like to have a pint after work, do not get into crypto. These markets generally do not stop, and actually things move way, way faster than traditional markets. So I think you have to think about that as well from a purely selfish perspective, which often matters a lot for many people.
That's very true. But I think particularly with some of the increases this year, I think maybe the returns are worth it. So my answer to that question as an infrastructure provider is clearly going to be around the infrastructure. And I think people should think carefully around the way they're setting up, and particularly when they're trading large institutional amounts. Maybe the internet is not the most secure place for you to be trading. So do talk to some of the infrastructure vendors such as ourselves, and we can definitely help with private, safe, secure, scalable infrastructure to help you get the best access to the best markets. And something Sergio talked about earlier was colo. And one of the things that we're seeing is a change in the way people do trade. And we're seeing a lot of people now want colo services to be next to the crypto exchanges around the world. And it's an interesting dynamic. I was talking to a couple of exchanges just last week. They're currently based in the public cloud, and they are going through the process at the moment of thinking, well, should I remain in the public cloud, or should I follow the example of one or two of the American-based crypto exchanges who have gone into much more of a traditional data center to sit next to traditional exchanges, and particularly foreign exchange liquidity providers, because a lot of the clients trading those exchanges and trading FX will be trading on the crypto markets as well. So we're definitely seeing people starting to investigate whether setting up outside of public cloud, but inside traditional data centers is maybe the way forward for certain exchanges. That then allows them to offer proper co-location services. The HFTs can build out their dedicated infrastructure. They can use their own FPGA cards. They can use their own specially built servers and other equipment that they use. And certainly we're seeing a lot of investigation into that as a way forward. And one of the exchanges, I won't say which one, but Henri knows who it is. One of the exchanges I was talking to last week said they started off spending a small amount of money with their cloud provider. It went up to, I think, $350,000 a month very, very quickly. And that probably is not sustainable going forward. So they probably want to find a more cost-effective solution as things scale and as they grow exponentially. So we're seeing a lot of changes in that space of the market. So look, I'm conscious of time. We've got about 5 minutes left. So Henri, what are your thoughts on the future, 2021, what's that going to bring to the digital assets market?
Oh, no, it's super exciting. I think 2020 was a pivotal year. 2021, a lot of things are looking at it's going to continue. Some of the things I'm watching, a part of the entry of institutional players, the entry of more traditional buy-side firm. I'm also watching what's happening with central bank digital currencies. I think a lot of developments there. Watching even more the retail interests as well, like I mentioned before, that's becoming easier. I always say the example is the day my mom is able to buy Bitcoin easily, that means that we have a proper retail inflow. So that's actually, we're seeing it now more and more. Some of the interesting things I'm also keeping an eye on on the broader asset class. One of them is really what's happening with stable coins. Again, these are digital assets backed one-to-one by fiat currency. It's ballooned now. There's over 25 billion of assets in there. There's a lot of more people are using it, not only for trading, but also now we're starting to see more cross-border payments and a commercial perspective. So companies are using it to settle trades, commercial transactions, completely bypassing the banking system. So very interesting. Another thing I'm keeping an eye on as well, we won't have time to talk about it today, but it's decentralized finance, DeFi. This is really financial services, like literally borrowing, robo-advisors, lending, even like insurance that are offered completely without any financial intermediaries. We're still at early stages. There's about only $15 billion in there right now, but I think it's very interesting, very early days, a lot of development. So really, there's a lot of things follow up. It's an area, you may not believe in Bitcoin, you may like it, you may hate it, but I think all of us, we have kind of this intellectual duty to at least understand it. And there's one advice I give to people over Christmas: spend a half an hour, watch some videos on YouTube about it, read a book about it, or actually, frankly, just try to spend a bit of time on learning it. What I do for a lot of people in my family, I give them a fraction of a Bitcoin as a Christmas gift. It's a good way for them to learn and actually get them interested in it.
That is a great idea. I love giving a fraction of a Bitcoin for a Christmas present. It's that time of year, isn't it? And particularly over in the UK, a lot of shops have been closed for a long time. The malls are empty, and you either go on Amazon and go on a spending frenzy to try and find some Christmas gifts, or give a fraction of a Bitcoin. I think that's a great idea. I like that. I will speak to my 85-year-old mother and see what she'll do with it. She'll be thrilled. Sergio, predictions from you for next year, please?
Yeah, I mean, Henri just nailed him, but I think DeFi is going to be huge. I think, crypto's here to stay. It's very obvious. It's been more than a decade now. Technology works. It's a great technology. You can build on it. You can do various financial services on the back of it. So for us, I think the major predictor that we have is that the institutional clients are going to really come into this space. And I think COVID's been a big, like a torpedo, basically, a catalyst for this. And I think next year we're going to see more and more announcements by the big funds, similar to Tudor Jones, who came into the space, announcing that they're entering the crypto space as well, and allocating at least a decent size of their portfolio to crypto exposure. Fantastic, thank you. So look, that brings us to the end of our 45 minutes. So I thank you both. Henri brought up a very good point there about watching some YouTube videos and doing your research. I've seen some of Henri's videos. His books are amazing, so I'll give a plug for those. They're absolutely tremendous. So I really would encourage people to follow on LinkedIn and YouTube. There were some other questions that came through to me. My apologies, I didn't get to them all, but the address is on the screen. Please do feel free to email through, and I'll forward any questions on to Henri and Sergio. But for now, I'd like to thank you all very much for joining us today. I hope that was a useful discussion. I certainly learned a lot, and we'll look forward to speaking to you all again soon, no doubt. Thanks again, and goodbye for now. Thank you, Matthew. Thank you, Matthew. Thank you, everyone. Thanks. Bye.